Now, it seems like just the other day we heard the Institute of Stockbrokers calling for a forbearance package, and now we're hearing them, of course, calling for a stabilization fund. Now, I do know that the Minister of Finance did come out saying that she would provide this forbearance package to the stockbrokers, sort of to save them from those liquidity challenges. Now, run us through exactly what the stabilization fund is going to address, that the fact that the forbearance package won't, and of course, who will be the recipient of these funds, and of course, give us an idea of how much we should expect, you're expecting from the government.
Okay. First, let's clear some issues. The forbearance the stockbrokers asked for was sometime last year, and it has to do with the margin loans, which they took from banks. And since the banks have taken the underlying assets, the securities that we're using, securing those loans, it is fair and proper for them to be forgiven of the loans. That is a completely different issue from what we are talking about when we talk about the stabilization fund. The stabilization fund is for the entire market, in which case we are saying, look, for the past 4 years, the market has lost much of its value. We've lost over almost 10 trillion naira now, because if you add the fact that Dangote Cement added 2 trillion after that, and some other listings that have been done, the market has really lost value and it's continuing to lose value. Therefore, there's no liquidity and there's no confidence. And we believe that if there's a stabilization fund, which is not new to the world, because other jurisdictions have done it to stabilize their market and to stem the drainage. It's like we're having a situation where a patient is bleeding. The first thing we want is stop that bleeding. And that stopping the bleeding is what we are asking for with the stabilization fund. We believe that some money in the neighborhood of 400 to 500 billion would do it. In fact, it's going to be such that we may not even spend all that before the market recovers. And so to that extent, we are saying a stabilization fund is what is needed at this critical time if this market must move forward. It was done in the US and in different dimensions, directly and indirectly. The government intervened and the US market recovered.
Now, you did say that you want this fund to sort of kickstart activities in the market, restore investor confidence. But isn't that what the market makers are for? I mean, barely 2 months ago, we saw the market makers, 10 market makers, being chosen by the stock exchange. And their role is to bring back liquidity into the market.
Yeah, first, they are 10, that's good enough. But the question is, do they have the financial capacity to bring out the market? As of today, the money required for that, I'm not sure the 10 of them can pull that stuff. But it's also a good development that they are there, because the government can choose some of them to be the instruments for managing the assets that will be mopped up from the market. And then they can be the people or the instruments or purpose vehicle to be used to direct the funds. So to that extent, they are very useful, but as of now, I'm not sure they have even really started work.
Now, can you give me a picture of exactly what state stockbroking houses are in Nigeria? I mean, you're saying, of course, there's a lot of margin loans loss we're seeing there. What state exactly are stockbroking houses in Nigeria in right now?
We have about if our figures are right, about over 200 stockbroking firms, and not up to 120 of those stockbroking firms are trading. And even if they were all trading, because of the amount of business that has been done, they're not making enough money. And then when you factor in the fact that a lot of them are having negative balance sheets as a result of the fact that the issue of the margin loans have not been taken care of. If they were forgiven, then it will bring the balance sheet to zero. As of now, it's still negative. And to that extent, they are not in a good shape as they should be because of the overhang of this debt. And so
how bad is it, though? I mean, how bad is the situation?
In a situation where you find less than half of eligible brokers are the ones trading, and out of that, maybe 20% are capable of doing proprietary trading. You see, because
so with this stabilization fund, how exactly is it going to work? Is it going to go to the stockbroking firms who are sort of going to be given that money to operate, do their daily activities?
No. Please, let's get it right. It's not. You see, right now, the stockbroking firms do not do proprietary trading because they don't have the money. And therefore, they cannot intervene when the market is going down. They cannot purchase and say, let's wait and all that. They can't. What we are having is foreign investors come in, buy when they want to buy at low prices, and then when they think they have made sufficient profit, they will sell. Then when they are selling, who buys? That depresses the market. But if we have a stabilization fund that is set aside and there are specific organizations set up to manage, then they will intervene at such times when people are dumping for money. They will be able to suck up that surplus. And that surplus will be managed for the government until the market recovers, and then you sell and make money for the taxpayers.
Well, thank you so much. I mean, thank you so much for giving us that update on what exactly you're looking for with the stabilization fund. That's the immediate past president of the Chartered Institute of Stockbrokers here in Nigeria.